Courage. Today is the time for courage. In fact, if you think about it, why are we largely rewarded as investors for the long term? It's because of courage. Because we know that people have lost much more wealth over time by not capturing the upside because they've been too conservative than they ever have by drops in the market. So what does that mean for us? We need to have perspective right now as markets are extremely volatile because of the coronavirus outbreak. So what I'd like to do in this video is just give a little bit of context and a little bit of our opinion surrounding what's going on right now. The first thing to realize is the reason you've hired us as your advisors is we're trying to help you be really good investors. And the way to do that is to try and take out as much emotion as possible when making investment decisions. And that's really difficult to do. It's easy to say, but it is more difficult to do. And here's why. We watch the news, we talk to our Uncle Frank, we talk to Susan, our coworker, and everybody has an opinion. The problem is the source we're getting that information from is inherently flawed. And us as human beings receiving that information is inherently flawed. Every news channel we watch has an agenda, and they are in it to make money. So they are going to say things in a dramatic way that can make us fearful. So they have an inherent flaw in the way they're presenting the information. Us as human beings receive those messages, and we are inherently flawed because of our own biases. And then we make a decision based on that information, which could be knee-jerk, like sell all of my positions to cash or something of that nature. So what we're trying to do is look at pure data. Take all the emotion out, and what is the data telling us? If the information is right now, this is, we think it's a temporary blip, we're not going to knee-jerk react to that. If we feel like the information we're getting is leading us toward a more permanent long-term downturn in the market, we will take some action. Now, some of our models will tilt a little bit because of the volatility we've seen recently, but all of the data sets we are seeing as of right now are not proving to be leading us down the path that this is a temporary long-term downturn in the market. If those data sets come back toward that, leaning that way, then we'll take an appropriate action. But until then, we are not going to make a knee-jerk reaction on it. Here's the problem. The market's retracted over the last few days. And if we make a knee-jerk reaction and move to a more conservative posture too quickly, when the market snaps back, we will not be in place to capture it. One time somebody asked me, hey JT, how far and how long can the market go down? And I said, well, I don't know the answer to that, but let me ask you a question. What is your favorite thing to buy? Is it shoes? Is it guns? Is it food at the store? Whatever it is, think about your favorite item to buy. And what if tomorrow it was on sale 75%? You may be more inclined to buy. But what if over the next few days it now is at 50%? Now you're probably more inclined to buy, but not only that, more inclined to buy more. So as we watch the stock market falling recently, which is driven on a lot of fear and we believe overreaction to what is going on, how long will it take before opportunistic people in our country turn from fearful to this is a great opportunity to buy? And when they think that way, the market will be driven back up as more people put their money in at a low point or what they perceive to be a low point. So we believe if you wait a little bit and watch, that market will start to recover based on people being opportunistic and trying to take advantage of the stock market at a lower point. The other point I'll make is in the news, all we hear is, markets are going down, but that doesn't always mean that all of the money that we have is losing value. If you're holding any bond positions, you're actually up year to date in those accounts. And a lot of us are if we're moderate, are holding about half our money in there. So those accounts are anchoring us during this time. So let's take a quick look at a chart right here of previous health-related epidemics, and let's look at how the stock market has reacted. It's really easy for us to forget that it wasn't that long ago we had measles 2019, Zika virus, Ebola and measles in 2014, MERS 2013, swine flu and SARS. Those are some ones we really remember. And the stock market, accordingly, over time has rebounded. So really, we kind of need to just disseminate the information. Do we think this is kind of a temporary blip in the market or truly leading us into a more long-term recession? And right now, all data points are not showing us that this would lead us into a long-term recession. It might, but until then, we're not going to react accordingly. So this is the time to have courage and hang in there. It's also the time to talk with me whenever you have additional concerns about your individual situation. Quickly schedule a phone call if you'd like, or a meeting with me, and we can talk about your individual situation. But just know this, we're watching things very closely. This is really important to all of us, and we are managing things accordingly. Also, people are wanting to know, if they should be moving something. That will happen naturally in your account as we get the data rolling in. The nice thing is you don't need to decide when to move it out or when to move it in or what to do, because we are naturally doing that as we get the information, and we can react a lot quicker than you or I could on the street trying to decide this. So let us work with you to get through it. Hang in there. And remember, courage is what rewards us as good investors. If you have more questions, please let me know. And I really appreciate your trust and confidence, especially during times like this. Have an awesome